Behind Amazon's soaring revenues and expanding cash reserves, could there be hidden financial challenges brewing? We've dissected Amazon's financials from top to bottom, packing our expert insights into this concise video just for you. Discover how declining margins and shifting cash flows might impact Amazon's future. Stay with us as we unveil the untold story behind this tech giant's numbers. Ready? Let's get freaky in those accounting sheets. Amazon.com Inc., established in 1994 and headquartered in Seattle, operates across e-commerce, cloud computing, and digital content. Its Amazon Web Services segment, providing cloud infrastructure like compute and storage, plays a pivotal role in the digital economy. This diversification across sectors may offer resilience against market fluctuations. Amazon's cash and equivalents rose from $75.09 billion in Q3 to $78.78 billion in Q4 2024, reflecting the holiday sales boost. This seasonal increase enhances cash inflows, yet subsequent vendor payments reduce cash later. Total debt remains high at $130.90 billion, but a manageable debt-to-equity ratio of 0.5 suggests balanced financing. Management's $5 billion revolving credit facility strengthens liquidity to handle seasonal cash flow swings. This proactive move underscores solid financial stewardship, essential for weathering fluctuations and maintaining operational flexibility. Here's a screenshot of the full balance sheet. Notably, Amazon's increase in total assets to $584.63 billion suggests robust reinvestment and growth, though rising liabilities could pressure long-term financial flexibility if not carefully managed. Amazon's gross margin, a key profitability metric, fell from 50.1% in Q2 to 45.0% in Q4 2024, dipping below industry averages. This decline stems from rising shipping costs and staffing challenges in fulfillment centers, so it appears to be squeezing profits. Effective inventory management is now vital to restore margins. Operating income margins are under scrutiny, with EPS growth flat at 0.0% last quarter. Investors should be cautious, as competitive pressures and economic fluctuations could hamper future revenue, impacting Amazon's potential as a value investment. Here's a screenshot of the full income statement. A noticeable concern is the decline in cash from operating activities, falling from $42.4 billion to $21.5 billion over the year. This reduction indicates tighter cash flow, raising potential red flags for investors. Amazon outperforms industry peers in key profitability metrics, indicating operational efficiency. However, its margins are below S&P 500 averages, suggesting room for improving overall profitability to match broader market levels. Amazon's revenue increased significantly from $158.88 billion in Q3 to $187.79 billion in Q4 2024, showcasing a strong seasonal peak common during holiday sales. This growth highlights effective inventory management, capturing heightened market demand. Net income rose from $15.33 billion to $20 billion, indicating robust operational performance. However, potential economic headwinds may affect future growth, so cautious analysis is prudent. Understanding these revenue and income trends is key when evaluating Amazon's financial health as a value investment. Amazon's free cash flow surged from $3.35 billion in Q3 to $17.80 billion in Q4 of 2024, reflecting robust operational management during peak sales periods. However, the free cash flow yield, a ratio of cash flow to market value, remains modest at 0.7%, suggesting limited immediate returns for investors. Significant capital expenditures and $4.99 billion in stock-based compensation indicate substantial investment in growth and talent retention. This interplay between cash generation and reinvestment underscores Amazon's strategy of prioritizing long-term value creation over short-term gains. Here's a screenshot of the full cash flow statement. Notably, cash flow from investing activities shows a negative trend, highlighting aggressive reinvestment. This could signal long-term growth potential but may affect short-term liquidity. Amazon's Q4 2024 revenue rose 10% to $187.8 billion. Excluding a $700 million foreign exchange headwind, unfavorable currency rates affecting international earnings growth was 11%, surpassing expectations. Operating income surged 61% to a record $21.2 billion, indicating increased efficiency. Management acknowledged risks like currency fluctuations and shifting consumer demand, but is investing heavily in AI and automation to enhance operations. AWS revenue grew 19%, showcasing strength in cloud services. These strategic investments may influence Amazon's long-term value, a key consideration for investors. Analysts expect Amazon's net income to rise from $67.58 billion in 2025 to $152.26 billion by 2029, showing an annual EPS growth of about 11.4%. EPS, or earnings per share, is a key indicator of profitability. This suggests Amazon is financially strong, but management warns of economic pressures that may affect growth, emphasizing the need to adapt strategies to consumer trends and manage costs effectively. Amazon's net income and EPS outperform over 88% of the S&P 500, yet rank around the median in its industry, indicating strong overall profitability but stiff competition within its sector. Amazon's PE ratio of 38.78 reflects a premium valuation compared to peers like JD's 12.94, indicating high investor expectations for future earnings growth. While this suggests confidence, it may also signal overvaluation risks. The PB ratio at 8.03, though high, shows market belief in Amazon's efficient use of assets. Management's emphasis on sustaining strong growth amidst market volatility highlights their strategic approach. Evaluating these metrics helps investors assess Amazon's potential as a value investment in the current market landscape. Amazon's PE score beats 66.7% of industry peers, showing strong earnings value in its sector, but only 26.2% of the S&P 500 list, appealing overall. Low PB scores point to overvaluation of assets. Amazon's DCF valuation suggests its equity value per share could reach $32.72 by 2029, based on an annual revenue growth rate of 13.48%. Revenues are projected to increase from $574.79 billion in 2023 to $1.2 trillion by 2029. However, risks like macroeconomic uncertainties, regulatory changes, and intensified competition may pressure profit margins, potentially impacting this growth trajectory and overall valuation. From a value perspective, Amazon's low DCF score, outperforming just 40% of industry peers and 17% of the S&P 500, suggests the stock may be overvalued relative to its cash flow projections. Analysts predict Amazon stock will rise from $152 in December 2023 to $229 by March 2025, reflecting investor optimism. However, management's response to economic and competitive pressures is vital for reaching these projections. Amazon's low analyst target score below 40 suggests that analysts expect its future performance to lag behind industry peers and the S&P 500, potentially due to concerns over growth or competition. Despite Amazon's impressive revenue growth and record operating income, deeper analysis reveals underlying financial challenges. Declining gross margins and a significant drop in operating cash flow signal pressure on profitability. High debt levels paired with aggressive reinvestment may strain long-term financial flexibility. Valuation metrics like a lofty PE ratio and low DCF scores suggest the stock could be overvalued relative to peers. While investments in AI and automation aim to bolster future performance, risks from economic headwinds and stiff competition persist. As value investors, scrutinizing these factors is essential to assess Amazon's true investment potential. Make sure to watch another video from our Value Explorer series by clicking the playlist below.